What do the latest inflation numbers mean for you and your IBonds? Hello, members and super savers. I hope you're healthy and well. As some of you know, March inflation numbers, CPI-U, came in earlier this week, and it was even higher than what we and the market had expected. Here's what we'll be covering in today's video. We'll start with a look at the latest TIPS real yields, because as many of our Diamond NestEgg regulars already know from last week's IBond fixed rate formula video, no one really knows how the Treasury sets the IBond fixed rate. But based on our analysis dating back over 2 decades, it does appear that since 2015, if we take 65% of the average daily real yield on the 5-year TIPS for the 6 months prior to the IBond rate reset date, this gets us closest to the fixed rate that is then announced by the Treasury. Then we'll move on to our updated May IBond rate projection, the fixed rate, the inflation rate, as well as how things might play out overall for IBonds in May. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Here's where TIPS real yields stand at the time of this taping. You can see there was a fairly big pop in yields between April 9th and April 10th. April 10th was the day that the Bureau of Labor Statistics released the March inflation numbers. And what the March inflation numbers showed was that over the last 12 months, the all items index increased 3.5% before seasonal adjustment, even higher than what we and the market had expected, as I mentioned at the beginning of this video. That's this blue line here. The Bureau of Labor Statistics attributed the higher inflation to increases in costs for shelter and gas. Core inflation, this red line here, which excludes food and energy, also came in higher than expectations. The March inflation report was the 3rd consecutive report showing a re-acceleration in inflation. And while there may be some seasonality in the January through March inflation numbers, meaning that inflation is often higher in the first quarter of a year when many price increases take effect. What this latest round of inflation data did was effectively support or even confirm the higher rates for longer narrative that we've been talking about on this channel since last year, because it currently doesn't look like inflation has been completely vanquished just yet. What this higher than expected March inflation report also did was significantly reduce the likelihood of Fed Governor Powell fully implementing the Fed's 3 rate cuts plan for 2024 that they've been talking about for a while. This change in narrative is supported by what we see in the markets. Traders started this year betting that the Fed would cut rates 6 to 7 times in 2024. At the time of this taping, investors are signaling that the Federal Reserve will cut interest rates just twice this year, starting in September. And some market observers are wondering whether the Fed will cut rates at all this year. We'll have our own analysis on this in the coming weeks after we've worked through some of the video requests that you've sent our way. But as you've heard me say before, now is a great time to start learning about how to invest in bonds and build a bond portfolio, because the best time to buy fixed income is while rates are high, not when the Fed announces the first official rate cut. So with that background in mind, we can see why real yields jumped on April 10th after the latest round of inflation numbers. Higher inflation makes it more likely that rates will stay higher for longer. Now, let's talk about what this means for our May IBond rate projection at this moment in time. Here's the IBond fixed rate analysis that we shared with many of you in last week's video, showing that 65% of the average daily real yield on the 5-year TIPS for the 6 months prior to the IBond rate reset date gets us closest to the fixed rate that is then announced by the Treasury. I've linked the original video for this IBond fixed rate analysis that we're about to talk about in the video description below if you're interested. So last week, as of April 4th, 2024, we had come to a May IBond fixed rate projection of 1.2%. That's this 1.24% average daily real yield for the 6 months prior to the IBond rate reset date, rounded down to the nearest tenth. Well, all these numbers here have gone up a bit with the latest inflation reading. So here's our updated IBond fixed rate projection as of April 12th, 2024, with all the updated TIPS yields. With the 5-year TIPS here now at 1.25%, rounded up, this brings our projected IBond fixed rate for May 1st, 2024 to 1.3%. Basically the same as the current fixed rate for all IBonds issued on or before April 30th, 2024. So remember this 1.3% IBond fixed rate projection here. We're going to come back to it very quickly. But before we do that, let's first look at the IBond inflation rate, because we'll need that number as well for what we'll be doing towards the end of this video. At this point, we have all the inflation numbers we need to calculate the May 2024 IBond inflation rate. The CPI-U all items number at the end of September 2023 is the starting point for the May 2024 IBond inflation rate calculation. And the CPI-U all items number at the end of March 2024 is the ending point for the May 2024 IBond inflation rate calculation. This gives us an actual 6-month change in CPI-U for all items of 1.48%. Multiply this by 2, and this translates into an annualized IBond inflation rate of 2.96% for May 2024. Now, let's combine both the projected IBond fixed rate and the inflation rate in the next section of this video to see where we get to overall and whether this changes our IBond plans. So, our projected combined IBond rate for May 1st. Let's start with our base case scenario, with our projected fixed rate of 1.3% here, that we just updated based on the TIPS yields as of April 12th. Let's add on the actual annualized inflation rate of 2.96%, as well as the projected bump, the inflation adjustment on the fixed rate, and we get to projected combined rate of 4.28% for the May IBond rate reset. So this 4.28% combined rate is our baseline projection. But let's say that the Treasury tinkers with what we think the formula is, or that TIPS yields come back down between now and the end of April. Things are moving pretty fast in the universe of bonds currently. So what we've done is run a more pessimistic scenario where the projected fixed rate goes down to 1.2%, as well as a more optimistic scenario where the projected fixed rate goes up to 1.4%. For example, if TIPS yields keep going up between now and the end of April, or if the U.S. Treasury decides that they really want to reward us super savers a bit. As the saying goes, hope dies last. But back to our scenarios. What we can see is 3 things. 1, for every 10 basis point change in the projected fixed rate, the projected combined rate also changes by 10 basis points. This essentially holds true for scenarios where the projected fixed rate is between 1% and 1.7%. Above 1.7%, the bump becomes more impactful and the combined rate goes up slightly more than the fixed rate increase alone would suggest. 2, in all 3 of our scenarios, the projected combined rate for the May IBond rate reset, it's below the current combined rate of 5.27% for IBonds issued on or before April 30th, 2024. And 3, in all 3 of our scenarios, the fixed rate is lower than the current real yield on TIPS, as you can see here, which should come as no real surprise given what we just discussed about the formula for the IBond fixed rate. So, based on what we know now, we are still sticking to the IBond plans we discussed in recent videos. Marcus and I will be using the funds from the 0% fixed rate IBonds that we've already redeemed to buy $10,000 each of IBonds before April 30th and grab the current fixed rate of 1.3% since we haven't purchased any yet this year. Remember, this fixed rate of 1.3% is the highest IBond fixed rate in over 16 years. And if it turns out that the IBond fixed rate on May 1st stays at 1.3%, or perhaps goes even higher, then we'll just gift one another more IBonds later this year for delivery in a year when we don't purchase our annual limit of IBonds. And the rest of our redeemed IBond funds will be redirected into 4-week T-bills set on auto roll as we wait for other interesting opportunities, one of which may be this upcoming 5-year TIPS auction here. As I mentioned in earlier videos from this month, we'll be talking quite a bit more about TIPS on the channel while those yields are attractive. And they seem to only have gotten more attractive since we've come back to YouTube. So do stay tuned for our upcoming IBond versus TIPS video, taken directly from our brand new Bond Beginners course. Because these rates won't stick around forever. Are you interested in learning more about TIPS? Do you find them confusing? Drop a comment below and let the community know what your thoughts are on IBonds versus TIPS for the inflation-protected part of your fixed income portfolio. All right, members and super savers, as always, I hope you enjoyed this video and learned something new. And if you did, be sure to check out our brand new Bond Beginners and Bond Masters courses, as well as our YouTube Super Saver membership. Our next live member Q&A is happening on Tuesday, April 16th at 6 p.m. Eastern Time, and just in time before this upcoming 5-year TIPS auction, which will be one of the highlights of our Member Live. Links for both our courses and the membership are included below this video, as well as the 15% coupon code for Bond Beginners and Bond Masters that's valid through the end of April. See you again very soon with more brand new wealth building content for your financial journey.